In a legislative whirlwind that caught many off guard, the Republican-led Senate swiftly passed the No Tax on Tips Act this past Tuesday. This move gives official momentum to a policy championed by former President Donald Trump during his campaign appearances, particularly in states like Nevada, with a high concentration of service industry workers. The bill, introduced back in January by Senator Ted Cruz, R. Texas, alongside a bipartisan group including Nevada's Democratic Senators Jacky, Rosen, and Catherine Cortez Masto, aims to provide significant tax relief. Specifically, it proposes a tax deduction of up to $25,000 for cash tips. However, there are a few key conditions. These tips must be reported to employers for payroll tax withholding, and the break is limited to employees earning $160,000 or less annually in 2025, an income cap set to adjust with inflation. What made Tuesday's passage so remarkable was the method. Senator Rosen brought the bill forward for a unanimous consent request. This fast-track process, usually reserved for less controversial matters, means a single objection can halt proceedings. Astonishingly, not one of the other 99 senators objected, allowing the bill to sail through, a rare feat for consequential tax legislation. Nevada has more tipped workers per capita than any other state, Senator Rosen stated, emphasizing the bill's potential for immediate financial relief for countless hardworking families. She openly acknowledged the idea's origin, adding, "No tax on tips was one of President Trump's key promises, and I am not afraid to embrace a good idea wherever it comes from. This development isn't happening in a vacuum." The House Ways and Means Committee also advanced a similar provision last week, suggesting a strong cross-chamber interest. Senator Cruz confidently declared, "Whether it passes freestanding or as part of the bigger bill, one way or another, no tax on tips is going to become law. Who stands to benefit, and who's raising concerns?" According to the Budget Lab at Yale University, roughly 4 million U.S. workers, or 2.5% of the workforce, were in tipped occupations in 2023. These roles span restaurants, hotels, and even courier services. While proponents like the National Restaurant Association laud the bill, tax policy experts and labor advocates are more skeptical. Critics argue the benefits might be minimal for the lowest-earning tipped workers, many of whom already earn below the threshold for federal income tax liability due to the standard deduction. Alex Muresianu, a senior policy analyst at the Tax Foundation, noted, "For the lowest-income tipped workers, it provides no marginal benefit. It would benefit moderate to middle-income workers substantially. There are also warnings about potential unintended consequences. Some fear employers might be incentivized to reclassify wages as tips to reduce their own tax burdens." Furthermore, critics like Muresianu point out a potential fairness issue. Why should a waitress earning $35,000 with $10,000 in tax-exempt tips be treated differently than a retail cashier earning the same total amount, all taxable? That clearly violates some principle of fairness, he stated. Another concern is that this reinforces a two-tiered pay system, where employers can pay a subminimum wage as long as tips make up the difference, a system many advocates are fighting, to replace with higher universal base pay, with tips as an extra. Currently, the IRS requires workers to report cash tips of $20 or more per month. This new legislation, if it becomes law, could dramatically change the financial landscape for millions, but the debate over its true impact and fairness is far from over. Stay tuned as this story develops in the House and potentially heads to the president's desk.